Right now, the monthly chart of silver, as we talked about, is the tide is going down. It's in the long-term downtrend. It's at resistance. If it starts to roll over, it can move a lot lower, back down to the 18 level or beyond.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for June 13th through June 20th, 2023, while supplies last. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Chris Vermeulen from thetechnicaltraders.com. Chris, thank you so much for joining us today.
Hey, great to be back, Elijah. Thanks for having me.
Well, it's great to have you. I know last time we had you on, we were seeing a strong rally in the metals, but you were really mentioning that people should be cautious and that we could see a pullback from here. We have seen a slight pullback. Your perspective on where we could be headed from here, if we wanted to start off with silver.
Sure. Yeah. Well, let's take a look at the silver chart. So silver and gold, I think, are going to more or less move together. So they have a very similar type of kind of trajectory. When we take a look at this chart here, this is the monthly chart of silver. And we can see we had a very big pop and rally after the COVID crash, and it's kind of been flagging sideways ever since. When we look at silver and we zoom in on this monthly chart, there is a very kind of significant trend at play here, which is a series of lower highs and a series of lower lows. And that's the definition of a downtrend. And right now it is trading right up in this previous high. It's definitely at resistance, and it's kind of been rejected and it's starting to move lower. So it's not the most bullish sign for silver in the near term. I still think we're going to see silver potentially sell off quite a bit, move back down. I think there's still another 6-8 months probably before we see the precious metal space potentially become a rocket ship type of play where they go up and to the right for, I think, 3, 5, 7 years, a big leg higher. So that's kind of the take on silver. Gold is very similar, except for it's trading up near all-time highs. If we zoom way back here, silver is equivalent to trading down 50% from the highs, where gold is just threatening to break out. That's because gold is the global safe haven. It's a slower moving asset, so investors can put more money into it. A big day on gold is like 1.5%. Big day in silver is like 8 or 10%. So you got to be obviously more cautious with silver. But when we look at the monthly chart here of gold, when you and I were talking, gold was in pushing up here, threatening to break out. But all the market internals around the precious metal space at that time, I was telling you, are very bearish. We've got this major resistance level on the chart, which has been rejected twice in the past. Now we've got the similar type of reversal candles, which is a long upper wick, meaning price rallied up and then sellers stepped in and unloaded shares and drove the market back down. So that is a very clear sign that there's resistance up there. The other thing is silver is lagging and gold miners are, to me, kind of the more important aspect. If gold miners aren't participating, then gold probably isn't, starting the major big breakout just yet. And gold miners are down. They're down about 45% from the highs, very much so like silver. So typically you see the leverage play around a commodity move first, and that would be the gold miners. Silver doesn't have to move first. It can actually be a little delayed, but the miners are usually kind of the telltale sign that gold is going to break out or not, and they're just not participating. And just a really quick view so you can viewers here can see where the gold miners are. If we go back to 2011, 2012, here's the top, and gold miners are just like silver. They've got this kind of rally, but a series of lower highs and lower lows. They're just not participating yet. But gold miners and silver are creating this big rounding formation. It's a major base that means a huge rally down the road, but we're just not there quite yet.
Now, if we turn back to silver here, I know I'm no technical analyst, just to put that out there, but I know that in the short term, we are seeing some higher highs and higher lows kind of on a more short-term basis. If we go back from the low we saw, around $18, your perspective on that, is that significant at all, or are you more concerned about the longer term trend? It does seem like, lower highs and lower lows there if you look longer term.
Yeah. So if we look, it all breaks down to the time frame of trader or investor you are. So you could argue here we do have a series of higher lows. We have a series of higher highs. So in the shorter term time frame, it is oscillating and trending higher, and it has been down near a support level. It's starting to bounce. So short-term traders, you look at this little trend, it's in a very short-term trend to the upside. This longer-term view that lasts, about a year almost, this is also kind of trending higher as well. But the long-term charts, those patterns typically trump all the shorter plays. So you got to be aware that, if we were to look at the silver chart, it's actually got a move down, and this little trend up is known as a bear flag pattern, which is the halfway point for a move. So we can use Fibonacci extensions, which is one of my favorite tools. Is the most accurate technical tool that I know. I've used it for decades. It tells us where price is headed next, and it's based on the sell-off and the bounce. That is telling us how much downside potential there is. So right now, silver has got the potential to drop to $21, which is about a 12% decline. And that's kind of where that short-term chart is pointing to. So, you can break a chart down. If they're fractal, you can break it down to any time frame, and you'll keep flipping between an uptrend or a downtrend as you move time frames. The key is to understand what the longer term time frame is, like the tide of like the ocean. If silver tide is naturally going up, then you want to be looking at buying dips on the shorter term trends. But right now, the monthly chart of silver, as we talked about, is the tide is going down. It's in a long term downtrend. It's at resistance, and I'd be very aware that if you're going long here, it better be for a quick play, and you better be very aggressive to protect your profits, because if it starts to roll over, it can move a lot lower, back down to the 18 level or beyond.
And can you go over for our viewers kind of your worst case scenario for silver in the short term? Because I know silver can move very fast, very quickly.
Yeah, so based on this initial little chart pattern here, $21 is that downside potential. If it bounces at that level and it forms another bear flag, it would probably be a larger bear flag. Then we're probably going right back down to 18. So it'll definitely do quite a bit of damage to the price action. We're pretty much $24 right now, 18. That'll be a pretty major bottom. A lot of support will be down there. So yeah, there's a lot of downside potential. If it falls down there, investors need to know that's a 25% haircut, which is not easy to stomach. And I've talked to a lot of different financial advisors, and when any asset drops more than 8%, investors start to get really uncomfortable and panic. And, it's not something you really want to hold on to if it's going down. You can always buy it later, hopefully at a lower price, or you can always buy it later when it's in a new uptrend and it's going to go higher for years. Instead of, if you look at this chart, it's pretty noisy. It's all over the place. That is a roller coaster ride for somebody who just wants to kind of buy and hold it and ride that out. There's other assets to be in. We're along the Nasdaq right now. One of our positions there, we're up. We just hit a 30% target at the opening bell today with that play. So instead of sitting here with your money in, potentially precious metals at the moment, you could be putting it into other sectors or assets that are rising. And when there's a financial reset and the precious metals space starts another major bull market, puts in a bottom, which you and I will be covering when that time comes, it's going to be the time to buy physical metals and load up, because I think that'll be the time we go into a 5+ year rally in metals, and we've been waiting for it for a long time, and we're close. I feel like we're months, half a year, maybe a year away at the most, I think, but we're getting there.
No, it sounds like, and I know we covered this last time, that this pullback and then rally again, it sounds like the time frame is pretty short. This could all transpire in a half a year, a few months. So it's going to be a roller coaster ahead, it sounds like.
It is. It's going to be a big roller coaster. And the problem is, if the stock market eventually rolls over and sells off, like right now, the stock market is in, well, the indexes are in rally mode. You look at the Nasdaq, it's heading up. It looks like it wants to try and make a major double top. The SP 500 is in rally mode. But, for example, last Friday, I was watching the markets. They all closed positive, but almost every sector was red, closed down on the day, but technology. Technology and the AI movement and semiconductor space with Tesla and Apple, part of that rally. Everybody thinks the markets are doing really well, but almost most stocks are going down, yet the indexes are going up. And that's just, it's a house built of cards. And when that wave, this kind of tech bubble, kind of growth stock wave ends here, things are going to get ugly. We're going to see a massive sell-off, I think, in all asset classes, including precious metals. It's going to create that financial reset. And miners and metals are going to be probably one of the first sectors to bottom, just like they have in the past when we've gone through financial resets after the tech bubble, after the financial crisis 2008. So their time is coming for sure, and it is going to be a roller coaster.
And I know some people are really hoping that the Fed will pause this week, and that will provide some boost for the stock market and the markets in general. But it sounds like what you're seeing on a technical level is even if the Fed pauses, it looks like we're in a rough time ahead.
Yeah, the Fed might move price action a little bit, but overall, there's bigger things at play. We're in a much larger economic cycle and just an overbought cycle for assets across the board, especially like real estate and stocks still. So they're usually behind the ball in what's happening, and they're always kind of reactive, not proactive, it seems. So it's going to be interesting. They always cause a lot of movement, but they don't totally dictate the trend of the market.
And we are seeing some signals of, a downturn in the economy from oil right now. You're thinking that oil could even fall further. Can you share with us the oil chart?
Yeah, sure. Yeah, oil has definitely got a fairly bearish pattern. So I'm going to go to the monthly chart because the big picture view is kind of where it's all at. If we go and back here and look at crude. So there's a couple things. Firstly, let me just quickly show this this cycle here of the stock market, because this plays into precious metals and crude oil specifically. So the stock market and economic cycles move with a bit of at a different time. So the stock market cycle is this blue cycle where it says top here. And the last two major assets or commodities that move are energy and precious metals. And then the stock market really goes into that stage for a massive multi-year decline. And eventually the economy will kick into a recession, but we don't have those economic numbers until after the stock market's already well on its way down. And 2022 correction was nothing. That was just a shot across the bow compared to what potentially is coming. So energy was the big mover, crude oil, in 2022. This year, precious metals are trading at the highs, and they are kind of the leading area. So knowing those are the last two kind of assets, let's go back and take a look at crude. And if we take a look at crude, here it is in 2007, 2008, just before the big financial crash. Crude oil energy stocks surge. And we've seen that here. We've seen a big surge in energy last year, and now they're coming down. And the same thing over here. It came down right into this level. It's hard to see, but there's a wick over here, some consolidation. So we've had the same pop and drop in crude, and crude right now is trading at this level, which if it's broken here, we're going down. Potentially we could see crude right back down to the 40s, maybe even the $35 per barrel level is going to be a slippery slope, just like we had over here. And I think we've seen oil kind of fizzle out because I think big money sees a recession coming, which means less traveling, fewer products being sold. Oil's used in a lot of products, can be a lot less shipping. So transportation is going to drop. So that's the outlook there that kind of signifies, a recession is potentially coming. And gold is on the flip side. Remember, gold is trading like equivalent to up here. So gold is shining right now. And usually gold, is one of the last ones before it starts to sell off along with everything else. So it's the start of we're at the edge of a reset, a major financial reset.
And how do you see this impacting? So we're looking at oil right now. If we see $35 a barrel for oil, it seems like that's not a good place for the economy to be in. How do you see this really being reflected in the general economy?
Yeah, I mean, if oil prices are down, it's going to be a rough economy. I mean, it's going to be, jobs, unemployment's going to probably start to go up. I mean, it feels like it goes against the grain right now because it's still a feeding frenzy. You can't find labor. Labor rates our pricing is still so high. Products are really priced really high. I mean, all it is going to be a weak economy, meaning it's tougher to get a job. The earnings for jobs will probably decline. Businesses are going to struggle. We'll eventually see a lot of businesses go bankrupt. It's what always happens in one of these resets. Most businesses are literally just living like paycheck to paycheck. They don't really make a lot of profit. So we go into a weak time. It creates a flood of bankruptcies, and that sparks a lot of unemployment. And it's just going to be a downward spiral. It's all about protecting your capital and preserving your job or your business and making sure it can survive.
And as for the stock market, if we could look at that, because I know you said that you're playing the stock market right now by trading it, but long term, you're really not that bullish on it.
Yeah. So when we take a look here, this is the Nasdaq, and I kind of want to compare what happened back in the tech bubble, what even happened back in the 2008 financial crisis, and where we are now. Of course, this big rally has been dwarfs this price action. But if we were to go back in time and just look at what happened to the Nasdaq, we saw a very big pullback in Nasdaq of about 45%. And then we saw a big 60 or so percent rally, a bounce. And this is kind of where I think we are right now. We're in this sharp rebound complacency stage before the market goes into a massive decline. The stock, the Nasdaq fell like 80% from that level. If we were to go and take a look at the 2008, the Nasdaq wasn't quite the same, but it still had a very similar type of price action. It sells off just like we had in 2022. We actually saw about a 25% pullback, and then it bounces up 23%. And then it goes into a huge swan dive and falls, 50% after that. And so we're in this complacency, this sideways, this rally phase in the market. If I fast forward to today, here is our sell-off, 36% or so sell-off. We've got a 40% bounce in crude, in the Nasdaq, and then we could work our way down to some huge sell-off and go into this stage 4 decline. And this decline is what is going to reset real estate pricing. It's going to clear the slate with businesses. There's going to be thousands of bankruptcies. Unemployment will start to go up. Precious metals will fall because in most cases, when the stock market is crashing, the US dollar rallies. And so there's two headwinds for gold and silver at that case. That's rising dollar does not help gold and silver pricing. And we've got natural liquidation from the markets. People are forced to cover their margin calls, which means the broker sells anything that they have to, which includes precious metals. And people just get scared and they literally just start liquidating everything. Even if it's probably the best asset to be in, they still liquidate it. So this blue line, if the market does start the sell-off, that's where metals have a reset. That's where the opportunity is after this reset takes place. The long play for holding physical metals, I think, is the place to be. And I'm super excited to accumulate some metals. And I hope we get a big, deep pullback in silver and gold because it's only going to be temporary. And the deeper it is, the faster the rebound it'll also have. So it's a screaming opportunity around the corner. Now, keep in mind, this is the monthly chart. So we could still be like 6, 8, 12 bars out. So it's not going to happen tomorrow, right? This is a multi-year super cycle trend. It takes time to unfold. And once it's unfolded, it's a pretty good journey to the upside.
And if we can, I guess, maybe end with your strategy with respect to investing, because I know you recently just wrote book, Asset Revesting, is the book. Can you tell us a bit about that and kind of how it explains your strategy going forward?
Yeah, sure. So the book Asset Revesting, it's this is the strategy that I've been developing and using for. It's actually not so much a strategy. It's a style of investing. So you've got the buy and hold investment strategy, which is you diversify across a whole bunch of different assets and you hold it forever and hope and pray it'll go up in value and that it's up near the highs when you want to retire. This strategy does the exact opposite of that. All it's doing is it's always looking for the best asset at any given time, and then it's reinvesting its money into whatever that asset is that's going up, and that is acting as either the growth play or the safe haven kind of play going forward. So it's a very straightforward, very simple, logical strategy. We don't hold anything going down. Anyone can use this strategy and create their own asset revesting strategy around assets they love. So you could create one for precious metals and stocks and the US dollar, and somebody can kind of create their own strategy around what their favorite asset classes are, so that they're always trading their favorite assets, but they're only holding or trading the ones that are going up in their favor. And so that it just creates that consistent growth going up. And that's what my strategy is actually called. It's called the consistent growth strategy, because it's just up and to the right. Every few months we hit a new all-time high on our retirement accounts. Doesn't matter if the market's crashing or not. Our accounts just either are holding their ground or they're going higher. And that's what's so exciting about a strategy that doesn't hold through that roller coaster. So, I mean, you can get this book, go to my website, go to books in the menu there, or you can go to Amazon and pick it up there. But it's a whole new way to invest. I actually believe this is going to become something that most investors are going to demand and want from their advisors, because the buy and hold strategy is the worst, the most dangerous strategy for somebody in retirement, because they fall victim to all kinds of things they don't realize, which I explain in this book. So, yeah.
And it sounds like it's at least possible that things could get a lot worse, and we could see a situation in the markets we haven't seen for quite a while here. So, Chris Vermeulen, we really appreciate your time today. If our viewers are interested in learning more, we'll link to the book in the description of this video. They can also go to thetechnicaltraders.com, which I'll also link in the description. Any last thoughts before I let you go?
Oh, that's it. I really appreciate the time here, Elijah, and take care.
Awesome. Thanks so much, Chris, and God bless.
Bye-bye.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.